Hello, everyone. Hi, Paul. I see you there. Interview starts in an hour. Looking forward to having a conversation with you, my friend, my new friend. How's everyone doing, NFP, today? Everyone ready for it to react to the reaction? Okay, so I just want to show it's Friday. I want to show some weeklies because weekly signals are important to me. I don't know about to you, but they are. And we have a 2 week reversal in S&Ps. And it had to fall quite a bit because that was 2972. So if we get a good NFP number that the market likes, we need to close under 2972 today for the 2 week reversal. All I could say is that is a pretty ugly candle. Do you agree with me? And it's my contention that there were so many people, and I've been talking about it all week, even last week, looking to get short on a rally to 30, 40, 30, 50. But I believe there are even more people that were looking to raise cash. Okay, they were looking to raise cash and they thought the Fed would give them a layup. Instead, in MBA terms, they got stuffed. Okay, they got stuffed. The Fed didn't help them at all. And now I believe there are many people trapped long, and that's going to continue to create liquidation on the downside. It's my contention that the long awaited due correction of the rally that we've had from late last year's low is now in progress. Okay, so we'll see what the NFP could do for it. Just a couple of targets that I see around the corner would be 23%, the smallest fib retrace. And I have a speed line coming in around 28 and a half. 2864 is 23% back, 23.6. It's my contention before we bottom on this correction that we will take out the low that we put in June, when a lot of people, including myself, thought it had begun before we had this big rally here. And I do believe, at least for now, that this low during this correction is safe. And, we could pull back to the 50% level, and I'm sure there's going to be a lot of pessimism. There's going to be a lot of people blaming the Fed for not being aggressive enough. And the narrative will be on the number, especially if we get a weak number, that they're going to say that um, Jay Powell is behind the curve. He should have gone a half. He should have stopped QT right away. And guarantee you're going to see a lot of a lot of blame placed on the Fed from the administration. And yet, at the same time, Jay Powell talks about the uncertainty of the trade picture globally that's hurting Europe more than us. And then President Trump is threatening a new tariff in September when the Fed is due for possibly another cut. So perhaps that's a strategy of getting the Fed to go again in September by keeping this trade war going. I don't know. They seem to be trade war seems to be a heavier outcome than rates. I heard a guy talking who used to be on the Fed yesterday on CNBC, and he was talking about that rates can't touch the impact of what's happening with supply chains and trade. That you could lower rates all you want, it's not going to really balance it or soften the blow of what could happen in the trade picture. If you're a student of history, just take a look at what happened with Smoot-Hawley, which was done through Congress instead of executive order. So there's a guy who sat on the Fed board for 10 years who's saying rates will not help if this trade picture continues to worsen. So that's my view on S&Ps. I still think you have to sell RIPs. I think people waiting for 30, 40 are going to have to wait until this correction plays out and we get another big wave to the upside when the Fed really gets aggressive and starts using their bullets. That will probably happen once we take out this low Fed's going to be worried, especially if we retrace 61.8, 78.6, and it's unthinkable that we could possibly take out the December low. But, we'll see. And, there are megaphone targets way down here. If you're a real bear, you're looking at a megaphone that would take you all the way down to 2,200. That's not what I think will happen, but I'm open to it can happen. And we talked about, I opened the show with US dollar yen, talking about the great call that Paul Franco made the day before we were in here. And he was talking about 920 being a sale. So I believe many, many, many in members chat had a great month yesterday, riding the yen down. Amanda was there, Blake was there. Many people in members chat had a huge day. I mean, you rarely see almost a 300 basis pip move in 2 days in US dollar yen. And with that being said, we're approaching what Paulie and I was talking about is the next level, with since we've taken out this low, or right there is going to come in at 78.6. Something I was pretty wrong about. I was right about the first pullback on the bonds, but this action that we had in the bonds. So I was right for this. One thing, we are making new highs. Can anyone guess what's missing from my chart? Anyone guess?
RSI.
Who's that? Andre, good guess. So I'm going to be doing an experiment and just trade form for a while instead of RSI. And you guys know how attached I am to RSI. And then after this, I'm going to try and trade without candles. So eliminating RSI and then candles will be the next step. And I'm just kidding. I'm very low tech. All right. And I clicked something. I don't know what I clicked. And I don't know how to get the RSI back on my charts.
I can imagine, Dale. Huh? I can imagine you sitting in the Bahamas with your smartphone, just trading by the price without the charts.
Dale,
yeah, who needs charts, huh?
Dale, you know the toolbar on the top. There's a round circle with a plus on the middle. The icon on its right. If you click that, it's like a wave with a plus. Go a bit left. No, the one on the left. That one. Click that. And then you will find it. If you scroll all the way down, it should be.
Will it stay on? Will it stay on, or I'll have to do that for every?
No, it should do RSI. There you go. So it should do.
Okay. Thank you, Stella. Yeah, I had that. Okay, great. So, wow. Thanks, Stella. There's divergence up here at 70. Anyway, I thought I'd start off. Blake makes fun of me. I'm the lowest tech guy in the FX industry. They dragged me kicking and screaming into the 21st century. And I really want to congratulate the team for being on top of what happened in the US dollar yen. They had a yen for making pips yesterday. And it just goes to show you that it could really be an edge for you to be in our members chat. And you know how I feel about Fridays for becoming a member. If you're not yet, it gives you the whole weekend to begin to. Yeah, well done. Yeah, Ben, real nice job and the cool thing about it was it wasn't done on the fly. So you had day to prepare yourself before the Fed for the trade and think about if you shorted it, where your stops would be, and start lining up targets. And the best trades are the ones that you prepare for ahead of time. The trades that you do that you see on the fly are more impulsive and aren't as high probability outcomes as the ones that you really work out on the kitchen table. So why don't you go ahead and join and be part of our training family, so that when there's a day like that, it can make up for all the little stop outs that you have. Amanda rode the end down, so she was not only, short cable all the way down, may have helped you during this bear market in the British pound as well, being part of it. I know this is free, and we give a lot of ideas out here, and also teaching and mentoring during phase. But really, it's only just the tip of the iceberg. And if you could think of things, I know I think of things in terms of pips. If I'm going to buy a car, it's going to be, 2,000 pips is what I need for a $20,000 car. If I'm going to buy a house, I need 5,000 pips to buy a small house in San Diego, kind of like a garage. And you're only talking about 9 pips a month, which you're going to capture just based upon our active patterns in play. Let's just take a quick look, see what the team's doing. So Andre's been on top. He's catching this bottom in crude here, and Andre's going to be with us. And Stell is short euro pound from something I didn't see technically with my RSI, and Stell has over an 80% hit rate. So if you work and you don't have time to really focus on the markets every day, Stelios's stuff, you don't have to sit in front of your trade station. In fact, you could go about your business. They're reduced leverage, they're big stops, they're big targets, and you don't have to spend your time trying to will the market to go your way. I know that I've taught the cursor technique a few times, and so I'm short TLT. So if I wanted this to work, I put my cursor on the candle and I drag it down, and it works even better when I get the whole community to do it at the same time with me. You just put your cursor in. Everybody, one.
I use horizontal lines. It works perfect. Make some pressure down there.
Okay, and I've tried a few things, and you can always get a magnet. Magnets seem to be pretty effective in putting it on your screen. Don't scratch your laptop or desktop screen, but you could use a magnet. So
or just set your targets there below and leave it.
Yeah, leave it alone. So, I also want to just talk about the weekly and the dollar, because, it's a real crowded trade. And, during the debacle in the yen yesterday, we had a pretty nice sell-off. I know, Andre, when you were on earlier in the week, you're talking 98.80. Kudos, bro. I mean, 10 points above that level that you had on your harmonic. But you look at the weekly, maybe it's done. I mean, this is not, even though we're still higher on the week, it's not a great looking candle. Okay, so we'll see what happens. Greg still thinks there's a shot for 100.
Don't you see? Can you see that's the strength on RSI, Dale?
Yeah, it's diverging.
No, and how fast it's going down at this moment. It's actually in a 4 hours time frame. We are already approaching oversold, or not oversold in your RSI, but we are almost there. So eventually,
for what, another launch up towards par?
Eventually,
okay.
Why not? Why not? We are now threatening that previous structural resistance there. We need wipe that support there at 98.02. I will show those charts.
It's got to hold this, though, right, Andre? The breakout that we had, that was kind of an internal head and shoulders formation. We shouldn't get back under 98.5, 97.5, right? Or that would change the picture.
97.5. Yeah.
Okay. So Blake wanted me to stall for a little while. The only thing I did yesterday that worked out.
I'm here.
Okay,
but you can go ahead. But
right.
we have NFP in 15 minutes. So.
Okay, just one more thing. I tried this yesterday because I was waiting a long time for the 78.6 in Aussie Kiwi, and I've already covered. I didn't take it into the NFP, but we did get a nice little bounce. And if you're looking for a bottom in Aussie, you want this to bottom first. Okay, Blake.
Okay. Hey, all right. So I'm gonna go ahead and take over real quick.
Go ahead, bro.
I just want to I'm gonna apologize publicly. Let me see. Let me get rid of this stuff to the folks that are ForexAnalytix subscribers. I had not adjusted all the key levels. Usually Steve and I both do this. He's out, but I didn't sleep very well last night. I was just telling the chat room I had like my 12-year-old son sleep with us last night because he watched a movie that was too scary, and I just couldn't sleep well, and it was horrible for me. I'm sure he's gonna wake up refreshed and like, no, this is great, me not so much. Anyway, but I did all the majors, and all the majors and the yen pairs, although the yen pairs are slipping again. You guys got to be real careful with this jobs report. I was just discussing with the guys at FX Macros, Gelos Capital, the office. As you guys, most of you know that, I'm piped into them all day, so I chat back and forth with the traders there, and these guys are, like the cream of the crop. They're handpicked from firms, around the country, and I have the distinct pleasure of trading with these guys. FX Macro, and one other guy you would know on Twitter. The other guys, they keep a very low profile. They follow everybody, but they don't talk or anything. They just observe. But they're really good, and we were just discussing the, ramifications of risk off and the repatriation of yen that could really hit the market on a risk off move. And if you look at the dollar yen technically, we are, we're approaching very dangerous levels, and everybody in the office is watching 106, and frankly below 106 it could open up a, we were just talking about moves to 102, 101, back to 100 again. If things start to accelerate, and really it's going to be about the NFP today, and if the wages come in a little light, wage inflation comes in a little higher, despite what the number is. I mean, you could actually see the dollar yen, start to break down. And so I think you got to just watch the 106 level in the dollar yen. And this has been it's been a very epic fail. And I'll tell you guys, I'm very frustrated. I was telling the chat room, I had probably one of my best days of the year yesterday, but it's still only about half the production of what I have done over like the last 2-3 years, because we're so accustomed to tight trading ranges. You're so accustomed to just taking profits when you see them versus letting them run. And I shorted the dollar yen at 109. I think my average was 109.17 two nights ago, and I closed it out at 108.95, and I thought I was King Pippin, King Pimpin, anyway, I thought I was doing really well. Yeah, that just shows you
Scotty Pippen.
Yeah,
Blake, you're a pimp
of pips.
Yeah.
By the way, Andre, you say Scotty Pippen. I actually drank on my 30th birthday at
in Chicago.
Blue Martini. Is it Blue Martini in Tampa with Scotty Pippen?
Wow.
Yeah, I had drinks with him, and he just happened to be at the bar, and I was actually he had a big gaggle around him, and I was like 3 people away from him, and he overheard it was my birthday. He bought me a shot. It was pretty cool. Yeah, it was
Jordan. What a combo.
Yeah, I was there. I was actually there in Tampa teaching traders how to trade. I was in a conference center. It was my 30th birthday.
Mr. Pips and Mr. Pippen.
Yeah, it was pretty crazy. So it's whenever you hear me say ripping like Scottie Pippen, it's I actually mean it, because I met the guy. This is cool. Anyway, not story for right now. But what I wanted to say is I was discussing with this trader Jack, who I'm actually going to be playing golf with. Who I'm playing golf with him and his dad, and one of his dad's business partners. He's a kid that I was coaching that was here in the office, and we were talking about the price action yesterday. And I'm like, don't beat yourself up if you're taking profits early. We as traders over the last year have been very accustomed to taking profits quickly because we have not seen volatility. Volatility is hitting the market pretty aggressively, and therefore, we as traders will start adjusting to looking for bigger ranges if this volatility persists. Instead of looking to make 20 or 30 pips on moves, we might be looking to make 40 or 60 pips. That's going to be an adjustment that's gradual. It's not, but when volatility spikes and it hits us, it's hard to adjust, admittedly, because and for me too, I should have quadrupled what I made yesterday, and I had a great day. I should have quadrupled what I made yesterday if I would have just stuck with my ideas. But like I said, I'm pretty gun shy too, just taking profits when I can, and that is obviously an issue. So that we're all going to adjust for. And so don't be, the point I'm trying to make here is don't beat yourself up if you have been in that same situation the last couple of days. Let's also take a look at the euro. The risk of the euro is if the euro breaks back above 111 by the end of the day. I know we've been above it. I'm just talking if we close back above 111, like let's say the dollar does come under some pressure and the euro closes at, like, let's say 111.50, that's going to set up for a pretty big false breakdown. And you're going to get a lot of traders that will cover at the end of the day because they don't want to be caught short going into next week. All right. That's something I really want to point out. As far as the cable, I'm not touching it. I know we're at channel support. I know it's oversold. I know blah, 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 blah. I'm not dealing with it. Why? There's so many other opportunities out there. Why put yourself in a situation where you're buying the cable, some very negative news comes out, hits the wires, maybe happens over the weekend, and then the cable opens up at 119, and then you're like, well, I could have been long the euro and making money. Instead, I was long the pound and got crushed. So, just things to think about. The Aussie. Now, obviously, some of you are looking at the Aussie and you're going, well, hey, Blake, we're pretty oversold here. I want to be buying these dips. My question to you would be, why? Why? We're in a situation where China is getting the trade rhetoric is getting heightened. China is going to be looking to respond. We're raising tariffs, the U.S., and Trump is escalating this trade war. What's to say that the Aussie cannot trade down towards 67 cents? It looks like it's going to get the craps, smacked out of it. Look at the Aussie yen. This Aussie yen looks like we're going to blow right through those spike lows that happened. Remember, that was a spike in Asian trade. I wouldn't be surprised if we blow right past 70 if things start to deteriorate. So you got to be careful with like the Aussie. Kiwi's the same situation, especially if you're doing Kiwi dollar. That's why some of these euro crosses, like euro Aussie, euro Kiwi, look at them rip. Look at the base that we have here in the euro Aussie, for example. Look at what can happen here. You don't think the euro can go up and the Aussie go down? We could see 180 in exchange rate. If things start to really accelerate, we could have the euro Aussie like way up here. All right. That would put the Aussie down at 63 cents and the euro dollar at 112. That is a distinct possibility. So don't think for a moment that they can't move opposite if you're only dealing with the dollar pairs. All right. You know, and the same could be said for the like Euro New Zealand. Look at the Euro New Zealand. When we take out this downtrend line, and you're like, well, Blake, you know, we're at 168. That's all the way at 176. Yeah, but do you think we could see 2 again? You think we could see that exchange rate again? I mean, think about where that puts the Kiwi. You know, euro dollar at 112, Kiwi at, let's say, 60 cents. Yeah, we will be trading right here. You know, I'm just trying to point out some realistic possibilities if this trade war accelerates. One last currency pair I want to mention is, you know, the one that could really, you know, intervention or not, could really catch people off guard is the Swissy. You know, the Swiss National Bank can try to intervene here. They can try, but you know, when or if traders have to rush to safety, we had this false breakout right here, and you can see we're testing this daily trend line. You know, dollar Swiss with long liquidation, everybody who's long dollars, short Swiss francs, or long anything in short Swiss francs because of the exchange rate, because of the negative exchange rate, they don't want to be in it. If they have to rush to safety and they start buying Swiss francs, the Swissy could be trading below 97 cents pretty easily if things deteriorate from an equity market standpoint. And if you look at S&Ps, you know, we could very easily close below 2970, and you know that exposes a move down to, you know, below 2900. And if that happens, then yeah, you're going to see yen strength, you're going to see Swiss franc strength. And you know, I really have more to say about all that, but you know, I don't have enough time. You know, I could sit here for an hour and a half and talk about it, but you guys have to, you know, join that event that I'll be presenting at with, you know, for Pepperstone Securities, and there's going to be, you know, some, you know, good traders there like Boris Schlotzberg from BK Asset Management, and Raggy Horner, and Jamie Sayatelli from the SB Trade Desk. You know, you guys have to be at that event. I've been tweeting about it. I'll tweet about it later today, so you guys can join. It's free, but that'll be a week from Saturday and Sunday. So. Oh, sorry, I had to take a sip of my very hot coffee. All right, guys, so we're about 3 minutes away. I know you're looking at the dollar, saying it's very oversold. Look, especially like the dollar yen, and you're like, man, I don't want to chase it down here. I don't either. But the fact of the matter is, if we're going to move, we can blow. You know, relative strength is not going to matter if we really start breaking down. And just think about how many people are wrong-footed and how many people are trying to buy this dip. There's probably a lot. I for one would rather sell and move down up to 107 and change. If the headline number is good today for non-farm payroll, and I'm going to be with you guys here, if the number is good for non-farm payroll, the headline number. So, you know, here my Bloomberg system, you know, here we're looking for a headline of 165. Let's say it comes in at 165, 170, 180. The dollar yen's going to bid up to 107 and, you know, 107.20. I'll be a seller up there. I'm going to be seller, like, you know, on any move up here. So if we get something like this, I'm looking to sell it. So that's now the problem is if we have a weak headline number, wage inflation's going up a little bit, you know, or even you know, hell, if you just got to just watch if it's anything exaggerated. I mean, we could see a move lower. So anyway, Dale, are you here? Stelios is here. Anything you guys want to say?
I'm here. I wanted to say good morning, by the way.
Good morning.
I just want to say what I said yesterday is that the way the dollar has traded in the last couple of days, and the way Powell was greeted by the markets and what he said, I still think the dollar is going to move more violently if it's a bad number than it will if it's a good number. So just my 2 cents on that. And
I'd agree with you on that. I think if it's a good number, yeah, we might get a 40, 50 pip pop. If it's a bad number and people look at it as dollar negative, we could really, because I mean, yeah, we could see dollar yen 106.30.
Yeah, because remember that what the big picture is now. The markets said after Powell that basically this cut was kind of like an insurance cut. Yes, we're pricing one more for September, or roughly, but it's not like we're well into a proper cutting cycle, and that can change. And we know how sensitive the markets are to this particular number. So 5 seconds to go. Let's have a look.
Okay, watch these numbers. Right.
0.3. Bang in line, right?
Right in line. Dang it.
Average hourly earnings 0.1 better than expected, so that's good. Trade balance.
The dollar yen's not getting any lift.
Yeah.
Dang me, you ought to take a rope and hang me from the highest tree. Woman, don't you weep for me.
Man, revisions last month were revised down. Okay, here comes the dollars coming in a little bit. Watch this dollar yen if it takes out the low 70s.
Yep, revision's 30K lower, so maybe that's.
Yeah, here we go. Here goes the dollar yen. It's starting to spillage a little bit.
Your dog likes it.
Yeah.
Wow.
Yeah. Let's see. Let me move this out of the way here.
Yeah.
Down in the 60s. Here goes the dollar yen. Watch the Swissy. Here, actually, you know what? I'll do this. Oh, dollar yen's coming under pressure. Damn it. Here's the dollar yen.
630. Good call.
Okay, there goes the dollar yen. So I wouldn't chase it down here. You just got to be real careful with it.
Yeah, clearly the market.
What are you showing? A 1 minute chart? Okay.
That's a one. Yeah, these are 1 minute charts. I wouldn't be chasing it down here, but man, I'm really hoping we can get a little bit of a rally up here. Really hoping we could get a little bit of a rally to like 107. I'm a seller all day at 107 if we can get up there. I just don't know if we're going to get it. I think people are going to be going, you know what? I don't want to be long dollar yen over the weekend. I think that's going to be the attitude here.
Yeah.
You know, who wants to be along this thing? You know, and going into the weekend with, you got Trump, who's going to be, who didn't get his smartphone taken away from him, I'm sure. You know what I mean?
The risk over the weekend for a headline, market moving headline, is not going to be to the upside. That's for sure, in terms of trade negotiations and all that. So
right, exactly. Yeah. So.
Don't you think it's interesting how the threat that he made was for September, which is when the Fed meets again, I believe, to maybe force the Fed's hand to ease again?
Yeah, could be.
Yeah, I mean, yeah.
I mean, the timing of it. He could have said in 10 days.
Indirectly.
Go ahead.
Yeah. He did also say about potentially imposing tariffs on the European Union. And we know that he's been talking about the car industry. So he's just firing tariffs left, right, and center. So it's very interesting to see if this strategy is going to work. You know, it's not constructive at all, but, who knows?
Man, I tell you what, I'm just hoping the dollar yen ticks higher. I'm just hoping it ticks higher into this. But look at the S&P now. Now the S&P is starting to show some spillage. You know what? I just sold some dollar Swiss here.
Yeah, I think the 30-40 shorts are going to have to wait for quite a while to sell it up there now in the S&Ps. I think that's off the table.
Look at the S&Ps coming off. This is just a 1 minute chart, guys. But I'm trying to point out the negativeness of. The euro looks like it's going to move here. Watch. There's the S&P. Here's the yen. I sold some Swissy at 40. So let's see what happens there. But I'll go keep an eye on the yen because I know most of you guys are probably focused on the yen right now. I mean, S&Ps look like they're going to break. Let's see here. I'm trying to read any Rosengren says no case for additional stimulus. Hold on. Additional accommodation at this time.
He was a dissenter, right? One of the two dissenters, so it's kind of makes sense.
Yeah, right. But he's out there. All of his comments are hitting Bloomberg right now. So that's probably one thing that's weighing on the dollar right now, and obviously equities too. So S&Ps. Let's see. Well, I mean, I'm just watching them over here. I don't know if I want to stick around in the Swissy. I mean, I sold a little. It's like I'm short right at current prices, so it's like do I really want to be short? But see, I'll just share with you guys that we're below this upper sloping trend line, so I don't mind being short while we're below like the 50s, but still, it's like, do I want to be short all the way down here? Yeah. S&Ps are still trading heavy. Dollar yen still trading relatively heavy. And we are below that 106.70. There's a 4-hour chart. So, I mean, we are at trend lows, any which way you slice it, right? Euro dollar is coming off the 111 level. So we couldn't sustain a break higher in the euro.
Dollar's coming back.
Yeah, it is coming back a little bit. I might just take my 9 pip loss and whatever. Man, but look. Okay, yeah. So you see that look at the Kiwi, look at the Aussie. I mean, these things are just getting demolished. Here's the Aussie, here's the Kiwi, and they're continuously getting hit.
Did you stay long US dollar MEX? It looks like it's breaking out
I
to the upside.
I was long some overnight. I sold it at 1930. I was long from like the 22 level. I bought some at the close and then I sold it it was like 800 pips. But I mean, for the peso, that's like equivalent of, maybe like a 30 pip move in the euro or something. So, I mean, I made some money. It wasn't like,
it looks,
and okay. it was small too. You never have as big of a position as you want, right?
That's right. Yeah, you're always It's right against the 250-day moving average right now. If it breaks through, it looks pretty good.
Yeah. Yeah. We are getting close to that 200-day moving average. You're right. I don't really know what to do here. I wouldn't want to be short the euro because I think the euro is still at risk of moving higher. Dollar yen's popping a little bit. I'm going to sell this rally, so just give me a second. Let's go over to the dollar yen. Let's give me a 1-minute chart. Boom, I sold a little bit at 78. I just sold some right there. And frankly, I don't mind selling more either.
I think we're done for the day.
With really. The FX, you think the FX is over?
I think equities have a chance of going lower, but I don't see what's going to drive the currencies from here. But
well, I think it's the domino effect, right? If you get some selling in equities, it'll spill over into currencies. So I don't mind being short dollar yen here, anywhere near on these little move ups. I don't mind being short, and doesn't mean I'm going to stick around all day, but because I'll be on the golf course in about 2.5 hours, so we'll see. And hey guys, I want to let you know Andre's coming on today. Is Andre here? I know he had to restart his computer.
Yes, I'm here.
Hey, Andre. And you know, before you talk, I just want to tell you guys, if you've never heard Andre in his analysis, he is our resident Elliott Wave aficionado. He's
the Elliott Wave is Gregor, but
I mean, I'm sorry, harmonic. Excuse me.
Yeah,
I only slept like 3 hours last night, so you have to excuse me. But Andre's got, in my opinion, some of the best charts to look at because he's got such a great eye for harmonics. He's going to be, blessing you guys with, his harmonic analysis on how he's viewing, these different pairs. So, and I know we've had a lot of big moves in the last 2 days. So have some of your charts changed a little bit based on the moves that we've seen the last couple of days, Andre?
Yes, of course.
Okay.
Yes.
They have changed slightly, or a lot. I'm asking.
Well, the yen pairs, as you noticed, has synced tremendously. So some of them approaching now crucial or pressure levels that I will try to show you. But yet, yes, we have massive moves inside the forex last few days. So that may change a little bit things, but let's see.
Right. Well, I want to thank you for being here today because yesterday we had Gregor, which gave us all of his Elliott Wave ideas and which was awesome to see, especially when we were talking about the euro and how it could form a bottom off of some of the support that we saw it bounce off of. And to see what you have to say today is going to be pretty awesome. So, guys and gals, I'm going to let Andre take over the charts here. And Andre, thanks for being here today.
Thank you. Thank you very much. Thank you for having me. Can I take the screen, Blake?
Yeah, absolutely.
Okay. I don't know if Stelios needs to.
No, I'm okay. I'm here, but you can take the screen and take it away.
So I'm going to click stop sharing, and then you should be able to. There you go. I can see you.
Okay. Let's go into CHF, one of the charts that you were showing us previously. How can I move this bar from here? Can I change this to the other screen? Yes. Okay. I published this chart yesterday. There's a huge probability for CHF to sink below this previous structure resistance trend line. So this trend line covering these previous highs, now again being threatened, and with the 200 moving average also being broken. This is a 4 hours time frame chart. I can show you also the daily 200 moving average above. Now as resistance or pressure elements. So at that point, I was expecting, I shared this chart with, let me change this into a lower time frame, 12 hours time frame chart. At that point, I shared, let me push this one because it can give you a clear picture of what I was expecting. So I published that chart with the possibility to form these inverted edge and shoulders, saying that a violation above this trend line should trigger more bullish momentum. So we have, at that point, we had these daily and weekly resistance fractals there. So basically, we are now trading. We were trading at the 169 extension, feeling that shark pattern, and the market has reacted very well from there. So let's say we nailed the pattern. And at that point, I was expecting a bounce from this previous structure support. The market has failed that. So this eventual edge and shoulder is no longer a valid pattern. So at this point, and based on the criteria that I have and supported by those Fibonacci levels, I will not be surprised to see a retest of this weekly support. That will print us also another harmonic pattern below 168 extension. This is a pattern that can extend to the 224 extension if the objective is to wipe out all those stops below. We will see CHF trading the 224 extension positioned around 95.90. So this is what it can happen if the market breaks its daily fractal support. So if the market violates these levels, we will see CHF trying to retest these previous fractal levels. So there's more potential for more bearish momentum. One of the trades that I took today, it's based on the 2618 bullish trade setup, a double bottom validated with a broken neck, resistance above, daily weekly fractal resistance printed above, and the pullback to the golden Fibonacci level. I expect this market to bounce from here. If the market will fail, it will eventually search for those levels below the weekly and monthly fractals at 50-54. If that fails to as support there on oil. The default targets for the 2618 trade setup, basically we copy, we clone the previous swing and we project a symmetrical ABCD pattern that can put oil retesting those highs, and between the 1618 extension and the 224, we need to see the market conditions once the price approaches those levels. There's others bearish sharp patterns territory, so pressure levels around 61.91 and 65.14. So those are my next pressure levels if the market decides to trade in my direction. MXN also approaching, and there's only two options. If the market fails me to trade below, it will trade higher, and I need to adapt and to try to identify the next potential behavior. So I'm not doing anything with Mexican peso at this point. I'm just waiting to see. Actually, I'm not very active trading Mexican peso, but I see what everyone can see, the 200 moving average now being threatened there, weekly fractal resistance, and above we have the 1618 extension. This may print us also 9067, a very sharp pattern between the 161, wiping those highs, a 224 extension. It's also a possibility about a pattern that usually retraces 50% of the entire pattern. So the range of the pattern needs to be the target. It's a retracement for a 50% retracement. That should put Mexican peso retesting these levels again. If that confirms to be the reality, we need to wait if the pattern gets formed there. Then we have CAD also approaching. I shared also those patterns before those completion points. So the first one that I shared, it was this sharp pattern, a 224 extension. The market has printed this wedge below, and we are now trading above it. So we are approaching, actually we are invalidating the sharp at 1618 extension. As you can see, the market has felt some pressure there, but it's now trading above it. I will not be surprised with 133. This is the next pressure level based on harmonic trading and harmonic patterns. This is the next sharp pattern pressure level 133, the 224 extension for CAD. S&P, and before showing you the S&P, I need to show you DAX because it has been more constructive in my opinion. And this is 2 hours time frame chart. So we are, let's say, we are following DAX on ForexAnalytix on a daily basis, and I shared these potential and eventual edge and shoulders before the breakout of that structure, saying the potential projection for the edge and shoulders there at 1254. So the market has validated the pattern, breaking this structure, achieving targets, and during that process, it has printed this bearish scrap pattern at 1618 extension. The market has traded a few points above and then forged this bearish momentum. At 224 extension, the market ends up printing this another pressure level, another sharp pattern below. From here, we saw the price retesting those highs and printing that cipher pattern at 78% retracement, also shared before the pattern completes the pattern, before the price completes the pattern, and then sink below. And that, let's say we are now retesting the next zone, or at this point we are already retesting those shoulders from this pattern. But at the time that I shared this chart, we were retesting this neck zone, this broken neck from these edge and shoulders. At that time, this support needs to be adjusted to those lows because it's already positioned there. But at that time, we were threatening the 4-hour support broken, and we have now support below. We are now trading, and I'm not an Elliotician. We have our Greg Horvat here with us in our community to provide our subscribers with that approach. But in my simple approach and a simple view on Elliott, I can see this as a simple 5-wave structure where the first wave, or let's say the 5th wave, is equal to the first one. So or let's call it a symmetrical 5-wave structure. I will not be surprised to see a 3 waves corrective structure trying to retest those highs, or eventually to approach these previous structure resistance and support levels. Minimum targets for this crab pattern printed at 168 extension, 1214. So let me show you what I can expect for S&P. I don't have my levels, my horizontal support and resistance levels here, but take the picture. We are now approaching the 168 extension from all these swings. So the last swing that prints this new higher high, we are now approaching the 168 extension. Again, I will not be surprised with a pullback to the 50% retracement, which is the default target for the sharp pattern. That's what we have here. I will not be surprised with the 5-0 sequence, which usually provides a new bearish opportunity there. Let's see what will happen at that point. 168 extension, as usually and as always, it can extend to the 224 extension. So those are the 2 levels that I will pay attention if I want to get involved in a bullish direction on S&P. Very similar with what we are seeing now on DAX. Now on oil, I've shown you already. Let me show you the yen pairs. Let me go into daily. So I had a pending order. So to buy this market, I'm already positioned, suffering at negative. Entered this BAT pattern at 88% retracement. It's a nice confluence of Fibonacci's there. I tried to go long, to enter in the long position there. So as you can imagine, I'm already suffering from my position there. I have my stops position below these fractals, so at that point I will not be surprised to see the market invalidating my longs there if it proves to break below the monthly support. So the reason why I set my stops below, it's because we know if the market trades below that level, it may trigger more downside momentum. So we don't need to be there. If we are trading a specific pattern that usually bounces from a specific Fibonacci level, and if the market starts to invalidate, we don't need to remain and keep suffering. No, we jump out as soon as possible. So that was one of my trades. This is dollar versus yen. I have two patterns for the same. So this is also a shark pattern, a 224 extension, confluence with the 224 extension. And what is the 224 extension? If I push my previous, or one of my previous charts, my daily charts on dollar versus yen, I shared this, the potential for the development of this, for this edge and shoulders. So this is the 200% Fibonacci extension. It's nothing more than the default target for that edge and shoulders formation. So we are now approaching that level. We are now approaching the 224 extension, also a pressure level for that shark pattern, to form that shark pattern. But we have also some targets, so not targets, but completion points for potential shark patterns, lower degree sharks, between the 161 and 224 extension, and the 224 extension will wipe out those monthly, will break this monthly support, and eventually will also end those stops positioned below. So those are the pressure levels that I have for dollar versus yen. The first one, we are now approaching that level below the weekly fractal support. More to show you, New Zealand versus yen. I was expecting a short from the 161 extension. The market has decided to print a daily and weekly fractal at 73.24, failing my patterns above, and we are now approaching the invalidating the shark at 161 extension. We are approaching this structure trend line support, and the 224 extension and the monthly fractal support. So let's see what the market will offer us at 69.39. So this is where the 224 extension is positioned at a few points below that monthly support level. Also, pound versus New Zealand, which is now trying to bounce from a potential reversal level. 224 extension, the default target for the edge and shoulders formation, target achieved. Daily fractal support printed below. Bullish divergence, I guess. We have bullish divergence there. So between those lows, breaking this descending structure trend line, eventually it will help achieving the default target at 38% retracement for pound versus New Zealand. Pound versus Aussie, another interesting one that I was expecting to trade a few points lower, also offering some bullish divergence. A bounce from these levels may trigger later the potential sharp patterns above at 182. Let's see how the market reacts to this daily support level. If the market breaks above these levels, it will increase the probabilities to search for that fib reversal extension at 1.82 again, and always it can extend, wiping out those stops positioned above this fractal, the weekly fractal. What else to show you? Also,
did you go over S&Ps at all?
Yes, I can show you again.
Okay.
Let me just show you that these 2 hour same frame charts. I shared these among our subscribers in our chat room before the Fed decision rate. So I was expecting some pressure level at 110.48. So this is the bullish crab pattern. Eventually, it can trigger more bullish. It was a pattern to trigger more bullish momentum. Eventually, we never know. We are now rejecting this crucial support, the previous crucial support, weekly and monthly fractal support now being under pressure. And as mentioned by Blake, validating, actually breaking above this structure support, eventually will trigger more upside momentum for euro versus dollar. S&P, Dale, I was showing our viewers the potential for a bounce from these levels, the 168 extension that we are now approaching. This will print the one potential sharp pattern at those levels. But without ignoring the possibility to form the same sharp pattern, not the same, but a few points below, using a different Fibonacci level, the 224 extension. So those are the two levels that, the market uses to produce.
Thank you, buddy.
Then, well, what else to show you? Aussie versus New Zealand. I think Blake has mentioned also the possibility to sync with Aussie. We have these, so I need to wait for this to develop, and I have no specific, we have nothing specifically forged at this point. A few points below, 103, the 88% retracement. So let me share a simple way to search for those patterns. So
it's interview time, Andre. So wrap it with this, okay, man?
Okay, yeah. 88% retracement is the default target or the default completion point for the bullish, in this case, the bullish pattern. We also know we have the 113 extension for the alternate or alternative bat pattern position at that 113 extension. So usually, and there's a quote that I used to share among our communities, the bat pattern fails you, just grab it. So eventually, if the market fails to bounce from those levels, we will see Australian dollar versus Kiwi trading even lower, retesting this monthly support.
Is that purple pattern invalidated just because it made one low?
Not yet.
One more.
Not yet. That's what I was about to say. If the market bounces from this area without trading even lower, obviously we need to respect some criteria here. But I believe if the market bounces from this zone and later, if the market breaks above these levels, this fractal, we can see those patterns printed above. And again, and as always, the 1618 extension and the 224 extension, there are cases where we will see the market trading lower from the 1618 extension and then rallying into the 224 extension, and the market will eventually offer you two situations to trade based on harmonics. So that's
nice.
My 2 cents for today.
Okay, buddy. Thank you, Andre.
A nice weekend, everyone.
Thank you, Andre. And you could follow Andre's work as a subscriber. And I pay attention to Andre. He's an important part of my intelligence gathering. And just his look right here in Aussie Kiwi confirms a couple of things that I was seeing. Yeah, Ben, Jens trying to recover. See that. Okay, Paul, thank you so much for your patience. I'm really looking forward to meeting you. So I'm promoting you to a panelist, Paul. So everyone welcome Paul McNeil to Face, and I'm unmuting you, buddy.
Hey, morning. How's it going?
Good, Paul. Great to meet you.
Same.
And you can share the screen if you just go to scroll your mouse underneath and it'll say share. It's a green box.
Gotcha.
And then we could take a look at your setup and see what drives you crazy every day.
Sure. Yeah, let me see if I can pull up. Mine is just news curation portion.
Okay. But, all right. Well, you can show your website. That's fine.
Sure. Great.
I have it up if you can't.
Yep, you can pop it up if you can. Yep.
Okay. So let's see. I'm going to share, and I have it here, right here. So here's Paul McNeil's website, Crypto Curator. So before we talk about what you do, Paul, why don't you tell us a little bit about what you were doing? I looked at your Twitter handle. You're a mentor, you're a coach, you're a friend, you're a Renaissance man. Okay. So before you got into crypto, and how long ago did you first start adopting it? Tell us a little bit about your life before crypto.
Sure. Yeah. So I probably started with the fact that I left high school. I grew up in Dallas. And I just returned to Dallas. Super excited to be back in the city after being gone for so long. But I left high school. Really didn't know what I wanted to do. Probably should have went to college, but I didn't. Instead, I took the fast food route while I was working fast food. The military sort of caught me on the way to work one day, and they recruited me. So I got an opportunity to serve the country for 10 years in submarines. I did that job. It was a great job. Had a phenomenal time there. Taught me so much.
You were what, on submarines, Paul?
I was on submarines. I was on 3 different submarines.
Wow.
2 of them in Hawaii and 1 in Norfolk on the East Coast.
So you don't have claustrophobia?
Unfortunately, I don't.
Fortunately, you do. You don't. Yeah. So tell us a little bit about how you were able to transfer the skills that you gained in the military, and maybe a lot of it is, not knowledge based, but discipline based, that translates into what you're doing now.
Yeah, so many different skills the military taught me has allowed me to do sort of what I'm doing in the crypto space today. Communications is definitely one of them. They teach you how to communicate effectively and to get your message across, and to be able to relate to people from different walks of life, different levels, from the top officer to the lowest enlisted guy. I learned a lot of skills from that, and that's translated well into my ability to network and to connect with other people. And that's sort of what got me into crypto. It's just connecting with other people.
How many years ago were you introduced to it?
I actually came across Bitcoin back in 2011.
Wow.
And if you can only imagine, listen, I'm not a coder. I'm not a developer. I understand tech to a certain point, but I'm not one of the cypherpunks. Let me put it that way.
I'm the lowest tech guy you'll ever meet. Go ahead, buddy.
So not being a cypherpunk, but Trace Mayer or Max Kaiser, I came across them on Twitter. And of course, if anybody knows me, they know I live on Twitter. But I came across those guys, and they were talking about Bitcoin. And I had the opportunity to go find the white paper, read the white paper. And just like everybody else, after you read the white paper, a switch goes off in your head and you go, oh, my goodness. And that's what I did back in 2011.
Okay. All right. So, boy, you've had some years to ride the roller coaster.
What
do you think of that experience of seeing markets that could, go up 4 or 5-fold and then give up 70-80% of those gains and then do it again? What's that taught you? Just witnessing it, whether you were long the market or not. And I assume, most early adopters probably cleaned up, unless, it's like the story of the guy who bought a pizza with about 10 Bitcoins. That would have been, I don't know,
10,000 Bitcoin.
Oh, it's 10,000 Bitcoins. Oh my God. Anyway, he has indigestion. So tell us what kind of psychology and emotional things you went through, and how you have learned to just, this is just the way it is, and adapt to this kind of volatility.
Sure. I traded stocks before I got into crypto. So
Okay.
sort of, on my journey there, but trading stocks, and I did a lot of day trading of stocks.
Okay.
Made a lot, lost a lot. But through all that process, and then when I saw crypto, and at the time it was Bitcoin, and I think Litecoin. So it was Bitcoin and Litecoin at the time. Ethereum wasn't even around. Watching these markets blew my mind, how rapidly it could run up and how rapidly it could fall. But what it taught me was patience. And if anybody's ever really had an opportunity to learn patience, this market will teach you patience like none other. Now, if you can't learn patience, you're going to probably lose a lot of money. Because if you can hold on and stick with it, you'll see that these bubbles that run up, they come crashing back down, but they come running up even higher, and they crash back down. They run up even higher. So if you got the patience to, as we call it, hodl, you could be in a really good position.
All right. Well, tell us how you felt early in the year at 3,000 Bitcoin.
So
well, were you patient and have enough conviction that you're not only holding, but you're accumulating?
Absolutely. So, and I'll give you the reason why for that. So again,
I'm showing the chart now.
Sure. Being in previous bubbles and from all the news that I curate and from all the people that I listen to, I knew what was going on. Now, most people don't have the luxury or the benefit to sort of do what I do. But when you're listening to that many voices, that many data points, that much information, it's almost easy to hodl. But it's
interesting, Paul, that you bring it up, because I'm a big believer in social trading and the strength of a community and masterminding. So now I know what you do. You're really intelligence gathering.
That's exactly what I'm doing. Listen, I've listened.
That's your military background too, isn't it?
It is. It really is. Intelligence gathering, listening to a lot of information. And I came across Delphi Digital. And if nobody's heard of those guys, you really should tune into them. Their reports are phenomenal. DelphiDigital.io. These guys, when I was introduced to Kevin Kelly earlier, a couple years earlier, before they formed Delphi Digital, and I literally cold reached out to him from seeing him on CNBC. It was a Bloomberg presentation that he was given. I was just sort of fascinated by it because, again, I was in regular stock investing as well. So after reaching out to him, I talked to him about Bitcoin, and he sort of went radio silent for a while, but then we reconnected, and he was like, hey, by the way, I'm launching this new research team for cryptocurrencies. I'm like, wow, that's awesome. But these guys do some really hard-hitting research. Their Bitcoin report was an amazing. I tell everyone, even today, you still should read their Bitcoin report. 59 pages of amazing information. So I read that report early in the year, around January, late December, early January, and they were saying that 3,100 was going to be the bottom. And they said that let me take it back. They didn't say that 3,100 is bottom. They said that the market would bottom Q1 of 2019. And after that, we were back off to the races. And that's exactly what happened. Yeah. So getting exposed to information like that from those types of minds helped me trade the way I trade.
Well, what are your minds saying now after this recent recovery and sideways action here? And I'm interested. I do interview quite a few crypto traders, and one of them told me about, maybe you're getting this, Ghost Month in August for crypto, which is the Asians celebrate, observe it, and that's a time when they pull in their horns. From speculation. Is that what is showing up on Crypto Curator, that August could be a great opportunity if they sell the market off to buy at a certain level?
Absolutely. A little bit of that is starting to trickle in. Some of that news is starting to bubble up. But I'll tell you, a trend that is starting to develop in the news, and I'm seeing it coming from multiple people, is this $20,000, $20,000, $20,000. Everyone is talking about it. And they're saying that we're going to get there 2019. So
okay, I know guys talking 30, Paul.
Yeah, I know. And Dan Pantera is talking 42, right, from Pantera Capital. I mean, Dan Moorhead, not Dan Pantera. Dan Moorhead from Pantera Capital is talking 42,000 by the end of this year. That's his prediction. Okay. So the point that I was making there is that you were sort of asking what I'm seeing. I'm seeing that this bullish action we're seeing again is going to run us right back up again through the end of this year. Okay.
Is Bitcoin the only crypto you follow? What other kind of a lot of people stuck in altcoins? Do you cover some of that garbage?
Actually, I do, and the reason that I do, and
they're like pink sheet stocks, aren't they?
Paul? They are like pink sheet stocks. I promise.
Or bulletin board, or
exactly. It's ridiculous.
They have to pay people to buy it to generate volume, right? Isn't that investor relations?
So, some probably do, but where my brief stops is I normally stop around the top 10 or top 20. I normally don't cover too much news outside of that. And the reason that is if you look at the market cap from CoinMarketCap or Brave New Coin, they both have great charts and markets on this. If you look at the top market cap assets, I think we have about 14 of them now that's in the $1 billion club. And I've been tracking this because I've been interested to see how many reaches the $1 billion club ranked. Right now, the last one is Monero. Dash is almost in the $1 billion club at 964 million, but Monero and Up are all in the $1 billion club. So once an asset reaches $1 billion market cap, I think that project, whether it has validity or not, there's something going on that's keeping it at that level. Now we got BCash.
Wasn't the kind of the appeal of Monero is that it the anonymity aspect of it, privacy, and I heard stories of people that thought they had privacy and found out that governments knew what they did in Monero. How about you?
I don't know if that's true. I think Monero is still significantly private. I don't think anyone's been able to tell what people are doing with Monero. But do
you own that?
I don't own Monero. No.
Okay.
And I'll tell you.
So I believe in when I talk to people, it gives me more conviction about what they're saying if they have skin in the game.
Correct.
So you just long Bitcoin.
Yes. So I'm definitely long Bitcoin big time. I tell most people, everybody I talk to, I tell them take Charlie Lee's advice. He says before you own anything else, and that includes Litecoin, which he created, you need to own one Bitcoin. That's Charlie Lee's advice.
That's a pearl. I like that. That's going to be our tagline.
Yeah.
Okay. So is there a subscription here, Paul, or it's free?
Right there, there's two bubbles. One subscribe daily, one subscribe weekly. The daily comes out every day. I try to get it out before 8 a.m. Eastern Standard Time. And then there's subscribe weekly, which I then take all of the week's news and I sort of put it together so that you can sort of see what happened the entire week.
Okay. So people just give their name and email, and then is there a fee for this?
No. So I've sort of switched the model a little bit. I still provide the top 3 news articles, a video, and a podcast for the day. And I send that out daily to the free list. And sometimes that's sponsorship driven. So sometimes it's sponsored. I have another list where I give the full digest. And if I can share my screen, I can show folks an example.
Okay, just grab it.
Okay.
You scroll your mouse under at the bottom and you'll see a green share.
Got
New
it.
share.
Okay. And it'll be my email that's there. So let me know if you guys can see.
There you go.
Where is it?
What's this halving about that's coming up on Bitcoin? That's a bullish event, isn't it?
There's actually a couple of halvings that's coming up. One's for Bitcoin and one's for Litecoin. The Bitcoin halving will be next May. And the one for Bitcoin, the one for Bitcoin will be next May, and the one for Litecoin will happen in a few more days.
Oh, okay. So that's generally, what's that doing? Reducing the supply?
Yes. So what happened is when Bitcoin first came into existence, the reward that you get 50 Bitcoin every 10 minutes. Every 10 minutes, a reward is given in any of the blockchains. Well, the ones that have proof of work, but every 10 minutes. So then Bitcoin halved to 25 Bitcoin, and then we're now sitting at 12.5 Bitcoin. Next May or June, it'll halve again to 6.25 Bitcoin. Okay. Litecoin is the exact same thing. It came behind Bitcoin, though, so it's one halving behind. So it used to be 50 Litecoin, and now it's 25 Litecoin, and so it will now halve to 12.5 Litecoin.
Okay. Thank you very much for that.
So this is an example of the brief, and I think it's showing up on your screen.
Yeah, it is. You're
so
up there.
I normally start this one that I'm showing you here is the one that's reserved for my Patreon supporters, but I normally will put a community choice, show them what the previous day got the most reads. And then I'll have a top news section, which is the top 3 news articles. I'll give you the top 5 digital assets, talk a little about price and technical analysis, normally curating the analysis from many of the folks in the industry from different publications, telling you what's going to happen with the assets. I have a crypto trading competition. I won't go into that. Altcoins, I'll have a section where I talk about the altcoins. If it's big news stories on them, I'll put it in there. crypto market overall, forecasts and opinions, acceptance and adoption. So I'm trying to hit all the buckets where people might want to have some interest in, hey, what's going on with adoption? Is it actually being adopted and used by anybody? Andreas Antonopoulos is normally my video that I do because he has amazing videos. He's an amazing guy in the space, but I also sometimes switch that out with a Ready Set Crypto and Altcoin Daily. I will do the on-ramps, talk about blockchain itself, if there's something with the code that's going on, legislation and regulation, controversies, anything with scam, hacks, and attacks, because people need to know what's going on with that. Then Would You Believe, deeper looks are just places for me to put other articles. I normally put a podcast a day and then a bunch of resources, including other newsletters, because while folks might like my newsletter, there are some other guys that write they do a much better job and go deeper in thought on what's going on. So those are the newsletters.
What a great resource.
Yeah.
I'm really glad I met you. It's also because you have to educate yourself about this before you do it. And, I see you have wallets on your front page. And, to me, a wallet's made out of leather.
Right.
Okay. Paul, so you're talking to, a guy who used to carry his charts around in his hand, and they traded currencies on chalkboards. So,
right.
But I really, I talk to a lot of smart people who have a lot of conviction about it. Mark Yusko being one of them, and people who I respect and pay attention to. And I'm an intelligence gatherer, and you were part of the process today. So, thank you so much for accepting our invitation. And the best way for people to follow you and give out your website, I have it here at www.thecryptocurator.com. Paul, like it or not, you're now my trading warrior brother.
Thanks. I appreciate that.
And really enjoyed talking to you. You have a great demeanor, and I really believe in what you're doing. We only have two eyes, right, Paul?
That's right.
So you go out there, and 1 + 1 can equal 11.
That's right.
So really appreciate you. You gave me conviction about my mission, and I wish nothing but prosperity and pips and 40,000 Bitcoin. And then when you cash out your Bitcoin at 40,000 or so, Paul, consider adopting me.
All right, I will do that. But I tell you this, there comes a point, and I'm going to mess this up a little bit, but in the Matrix, when Neo was asking Morpheus when did he know he was ready, and he'd basically tell him, you basically know when you're ready, right? Yeah. It's the same thing with Bitcoin. There's going to come a time where we're not going to have to shift it into fiat anymore, because it will be, that's what's there. There's no more fiat to shift Bitcoin into. It becomes a unit of account. That's the way it is going to be.
Wow. All right. So notes from McNeil with his outlook for the future. I do agree. The war on cash continues. So
yes, it does.
Thank you very much, Paul.
You're welcome.
Have a great weekend. Appreciate it very much.
All right.
Okay. Everyone in Face, have a great weekend. Remember, don't just count your pips, count your blessings. And we'll see everyone Monday. Adios.